Okay guys, so in this video we're going to be speaking about the different types of traders in the market, okay? The different types of traders. Okay, so first up you have a scalper. A scalper is somebody who likes to get in and out of the markets very quickly. They place a trade, the trade moves in a matter of minutes so the trade moves in a matter of minutes and they take their profit. Okay, the person does not like to trade for hours and hours on end. They just like to get in and out of the market within minutes. It could be 5 minutes, it can actually be seconds, it can be 15 minutes. I would say a scalper is no longer than half an hour in my opinion, okay? But that's just my opinion, okay? Next up is the day trader. A day trader is somebody who likes to get into a trade. He might wake up for a London session or he might wake up for the New York session and he gets into a trade and he likes to hold the trade for a few hours. He doesn't like to hold the trade overnight. He just likes to get in and out, but he will hold his trades a lot longer than the scalper. So he might hold a trade for an hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, however long, but he's out of the trade before the day ends. So he's a day trader. He's finding trades, he's getting in buys, he's getting in sells throughout the entire day, okay? That is a day trader. Next up is an intraday trader. An intraday trader is similar to a day trader, but the only difference is he likes to hold the trades longer than the day trader. So for example, the intraday trader might hold the trade for, let's say, a day or 2 days or 3 days, okay? Or he might hold the trade for 2 days or 3 days, but he'll take partial profits along the way. That is an intraday trader, somebody who likes to hold trades throughout a certain amount of days, but it doesn't go to weeks, okay? So speaking of weeks, next up is the swing trader. The swing trader is somebody who likes to get into a trade and his only intention is to hold this trade until next week or the week after or the week after. That is a swing trader, because with trading, the price of the asset you're trading, if it follows certain patterns, for example, a break of structure, don't worry if you don't know what that means, we're going to get into it in the later videos, it's only going to reach a certain target. And one thing that I studied is that, you know, these large corporations who move the markets, they have quarterly meetings of where they want price to go. Obviously, that's subjective to a crazy news event. For example, if there's a war, then all of that goes out the window because the war will affect the market, okay? But they have quarterly meetings on where they want the price to head throughout the next couple of months. Okay, so if somebody's getting in a trade and they're a swing trader, they're just holding the price up until the next price target, which based off of technical analysis and analyzing the chart, they know that it's going to reach that price point because they're most likely looking at the higher time frames, which indicate a way higher possibility that the price will reach that price point, okay? It's just a matter of time of holding a trade, and usually swing traders are people who are very calm in their personality, and you know, they're very patient. They're not here for overnight success, and they're just content with getting in a trade, holding it over weeks and just minding their own business basically and getting about their life, okay? They see it as an investment that they're not even looking at. That's the habit of a swing trader. Next up is a position trader. Now, usually what you find with position traders is these are the type of traders that usually have a lot of money already in the bank, okay? So what they might do is they might enter a trade, they might leave it for a year, or they might leave it for 6 months or months on end, right? And they might come back and the price has hit their profit target. However, the only downfall with being a position trader, even though they wouldn't see it as a downfall because they've already got capital, so they're not stressing about money, etc. The only downfall would be that they would have to see a lot of drawdown, because if they're entering based on a monthly time frame or the weekly time frame, they would have to have a really large stop loss in order for them to still be in that trade for months on end or weeks and weeks and weeks and weeks and weeks on end. So that's the only downfall really and truly. So that is the categories of different trading styles. It's just up to you. You look at yourself and you ask yourself, what's my personality type? What do I like? What would I feel uncomfortable with? And you know, become whatever trader you like. But for me personally, I like to day trade. I like to get in, hold a trade for a few hours and get out before nighttime. I used to hold trades for very long, overnight, etc. I still would, to be honest. I still would. It just depends on the risk to reward, etc. If there's any liquidity points, don't worry about these terms. You're gonna come across them and we're gonna teach you everything, don't worry, okay? But I like to hold trades. I like to day trade, but sometimes I would hold a trade for longer. If the risk to reward makes sense, I would hold the trade for longer. until it's reached my take profit, my target point. Okay, so you decide what do you want to be, but I would recommend, if you're starting out, do not scalp. Do not scalp if you're starting out. I would just recommend become a day trader or an intraday trader in the beginning. Okay, not even in the beginning, but that's what I would recommend. I would recommend being a day trader or an intraday trader. It just works best. It will save you a lot of stress, headache, and yeah, that's the different trading styles. And I'll catch you guys in the next video.